folks, welcome to Project Gamma. At Project Gamma, we have candid conversations with leading founders, tech leaders, and cybersecurity executives where our guests share their experience. Project Gamma is brought to you by Gamma Force. Gamma Force is a cybersecurity company that helps tech companies with strategy as well as execution, ongoing management of security programs, and cloud and security engineering. Today, I'm super excited to have John with us here today. John is an engineer with a computer science background who is focused in tech, having served as CTO and head of engineering for multiple FinTech companies, building and helping them scale. He's currently serving as CTO for a stealth mode FinTech startup that's using AI to help active traders. So, John, you've served as a tech leader in multiple companies, from startup to growth mode. In startup circles, we talk a lot about the differences in early stage versus growth mode, how they're different. How have you been able to navigate companies and make an impact as a leader in companies as they mature through those different stages?
Hey Warner, thanks for having me. Happy holidays. That is a very good question. I've started companies. I've joined as CTO of early stage startups. I've also, through acquisition or other stages of my career, been in larger companies. I don't think there's a single kind of answer about kind of how leadership or how impact changes. I think it's lots of little things. Obviously, in a startup, things are chaotic at best, and plans change, and flexibility is key. And I think communicating that and making everyone comfortable with the fact that when things change, and they will, it's not always a bad thing. It's not the world, the sky's not falling. Things are going to be okay. We've learned and we've now are better off from whatever we just learned, and it's going to inform our plans. Um, Flexibility and kind of just being able to explain the long-term picture and how does everyone work, which is going to be different throughout the startup or a large company, fit in the picture of how they're impacting or how they're improving or how they're like making the company more likely to succeed and how they're moving company towards the kind of the North Star. So I actually think that is more similar than it's different. I mean, the keeping everyone on the same page, a lot of communication about why we're doing what we're doing, how things are going to fit together, um, is I think a very consistent and common thing that's necessary in both in companies of all sizes. I think at some point, as a leader of a larger organization or in a larger company, it's a lot more kind of strategy and a lot more thinking about what teams you put together and what their missions are and how they work together. What are the API interfaces between the teams, and kind of how do they all fit to the larger business vision. Whereas when you're seven people, five people, 10 people in a metaphorical room, now that we're all remote, that's not, there's a little bit less of a long range planning, a little bit less of a rigorous kind of org structure exercise, and it's more just, you have 3 months, 6 months, 12 months until you run out of money. So what are you going to do to kind of make it work? So it's a little bit of a different kind of maybe horizon of planning. But I still think the similarities are more than differences. I think getting everyone on the same page, getting everyone motivated, explaining what we're working on, why we're working on it, why are we going uniquely suited to solve the problem we're working on, and getting everyone confident and excited, I think is something that is consistent throughout stages of companies.
Yeah, that for a founder and a leader in an organization, being unable to delegate at certain inflection points can often be scale limiting. And
Hmm.
it seems like you've had success delegating and growing your
Yeah.
teams as your companies grow. How do you like to scale out your technology organization, your org structure? Do you have a
Yeah.
typical pattern, or is it different depending on the company?
I don't think there's a single kind of solution fits all, but I completely agree. Delegation is key. Um, it's often said, not by me, by lots of other people, that you want to to get delegate yourself out of a job every 3 to 6 months, and so that you're working on the next challenge and you're elevating your team to working on important things as opposed to being a bottleneck yourself. So I totally agree with that. There's also the whole kind of founder mode discussion on the internet, I don't know, 3, 6, 9 months ago, where that can be taken too far to the point where you're a little bit removed from the actual work. And as long as you as a founder, as a leader of any company or group, I think need to be able to still have a finger on the pulse of what's going on. You have to know what the metrics are, what the KPIs are that you care about, what the end quality of the product that is coming out of your team that's building it. I mean, you have to be able to kind of get back into it when you need to and identify kind of hotspots or problems that things aren't working that well and be able to jump back in and kind of help solve it. I think that's the most effective form of leadership that I've seen. Not that there aren't other forms. So you have to be able to delegate, but you have to also be able to come back and be able to understand what's going on and help fix the problems kind of when they come up because they will come up. Um, so more like as an example, in my current startup right now, we're very small. We're about 10 people total, and the engineering team is about five. So I've been very happy to be hands-on coding again. It's been a long time. It's been 4 or 5 plus years that I haven't done any of that. And that's been really great, but I am keeping the back of my mind that that's not something that I should expect to be doing for the next couple of years, right? As we grow. So how do we start delegating things away? And I think the way I usually think about it is there's kind of in a small startup, you often the pattern I've seen in my experience is you end up having kind of horizontal expertise. You have someone who's really good at the front end. You have someone who's really good at, I don't know, infrastructure, maybe at the bottom of the stack, or security or DevOps or things like that. Yeah, and you have a couple people who are really good at, all the business logic and kind of the storage and the data storage and the stuff around kind of in the middle. And that gets you to a certain level of scale. But the problem is, and that's kind of, I think, how things often happen in the very, very early stage of a startup. People tend to just work on the thing that they can be the best at and just kind of move things forward as fast as they can, which I think is totally rational. But you end up at a point where you have a lot of kind of low bus factors at each point of your stack. And if someone goes on vacation, like the front end person or I don't know, the infrastructure person, like it's kind of puts you in a tough situation, especially as you're trying to, get your first few customers. And then if you want to figure out some kind of on-call rotation or something like that, and no one person can really understand the full stack because they've all been working kind of in their areas, you start, running into those challenges. So usually the first thing I try to start doing is make sure that not just one person knows everything about each point in the stack, and make sure that we share the knowledge as much as we can, which sometimes takes a little bit away from, excuse me, an early stage startup's mantra of just moving as fast as possible, because now you have to be thinking about internal documentation and how am I like where am I storing this in the wiki? Am I putting this in the README, in the repo? Am I putting in code comments? Where am I going to explain kind of the data flow diagrams and like, but that's work that has to get done as the group grows so that we start thinking about maintaining as opposed to just building. Once people start using your software and which is a great thing, you obviously want that as a startup. You have to start thinking about how am I going to make sure the software is running. And so you move a little bit away from just the build, build, build mode to the I need to like operate this machine, whether it's, in our case, in a lot of FinTech companies, you have nightly data loads. And so like you have to like make sure those are running right. And then you have to make sure that the app is up and running and you have to look at different metrics. So you start moving away from just building to more of a maintaining and building. And that I think triggers a bunch of organizational kind of thoughts of like, how do we want to make this happen? How do we want to grow this to the point where we can do both things at the same time, build and maintain. So that's kind of one big inflection point. Another one, as you get a little bigger, is you start having kind of like until you get to a decent size, you have a bunch of jobs that are none of which are really full-time jobs. Like you don't you care about security, you care about, infrastructure, you care about things like that, data engineering, building kind of internal kind of, data lakes and reports on top of that. But none of them are really a full-time job. Like hiring someone to do that when you only 10, 20 people I don't think it's a full-time job, and then they'll end up needing to create new work for themselves to kind of justify like their role in the company. So that's a tricky one. It's like how do you go through that phase of having these really critical things, but it's not a full-time job for any individual thing? Do you like I've tried a few different strategies in different companies in the past. One is you kind of stripe those responsibilities across the existing team and say, hey, now you have your primary responsibility of whatever it is you're doing. And I also need you to keep an eye on our infrastructure, or I need you to also think about security, or I need you to also think about our data lake internally, as well as whatever it is that you're doing on on your full-time job. That has worked to mixed success. That can work, especially if you have multiple engineers striped into each kind of area of responsibility kind of on the side so they can, have some redundancy. Um, but I've seen that be kind of a tricky stage until you get to a point where, yes, you need someone full time on security or on infrastructure or on these things. So that's I've talked a lot. I apologize, but that's a few different thoughts as I've seen grow from like a five-person team to 10, 15 to maybe 50. Once you're past the 1,500 person mark, then I think you certainly have enough room there's enough leverage where hiring a specialist in one specific area is going to make everyone more productive or can focus more on their work. So a couple of the thoughts hopefully kind of help the conversation.
Yeah, really interesting thoughts. I've always embraced personally and professionally that uh, I couldn't be promoted if I couldn't be replaced, and I think in some organizational cultures that's not typical, right? The archetype of the engineer who holds everything really tight, or any person in an organization, so others can't do their job. But I wouldn't have been able to be in a manager role later if I wasn't able to be replaced as an engineer.
Yes.
And
Yes.
cross-functional teams, I really like how you touched on that. That's one of my favorite philosophies, having cross-functional teams with shared purpose, and DevOps culture, embracing DevOps culture and practices. And those teams can look different, right? It's usually a combination of a software engineer, test engineer, systems engineer, security engineer, product manager, scrum master, or any combination of these sorts of roles and more. But really, it's having the right team composition for shared responsibility, that shared purpose. And
Mhm.
I love hiring the best folks and empowering them. And part of empowering them was creating the environment where constraints are removed. And a big part of that is not hyper siloing based on role. And it sounds like you've taken that approach as you've built your teams as well.
Yes, I love what you're saying. And I would add one more thing, which is you obviously want to hire the best people you can. You want to give them as much leeway as possible because they generally, hopefully, are bringing something unique to the team that you're hiring them for their knowledge. You want to hire people smarter than you as opposed so that they can, add to the net kind of IQ or experience of your team. But one thing I have seen I've learned, I wouldn't say the hard way, but just like I was a little bit not so great at this in the past was giving too much leeway and not always clearly communicating what our specific goals were. So people kind of had too many axes of freedom, degrees of freedom, and started going down different paths that weren't always necessarily kind of the most high ROI kind of projects for our stated, goals, whether quarterly or on some time basis or business metrics. So, engineers don't always love to think about, I think, that they exist to build stuff to help their company succeed, right? They don't always. I've seen situations where engineers are building stuff just kind of because it's a cool thing to build, or it's there's some like mental kind of gymnastics like automation of this, which is great in isolation. It is a net positive thing, just no argument. But we can't work on everything, and we have to prioritize. And I think bringing engineers back into the fold of bringing them into the conversation. And I think this is why I say I'm learning this for myself. I'm not blaming anybody else, any engineers, is that like they weren't always in the room where those business goals were being discussed, or the product, goals were, or why are we doing what we're doing, or what are the timelines we're going to do. And not everyone has to be in the same room. At some point, that becomes difficult. But we didn't do always a great job explaining those things, or kind of then setting each team to say, okay, or setting each group to say, okay, given these overall goals, what should you be working on? You can bottoms up approach is great. Like have teams suggest what they want to work on given the goals that the leadership team or cross-functional teams have put together. So to kind of keep it concise, what I've learned is that leeway is great, but you want to also have some pretty kind of careful guidelines to make sure that we're working on the things that are absolutely going to be the most useful for our mission. Because especially in a startup, when you're default dead, you have a ticking clock. So you want to make sure that you put yourself in the best possible situation.
I love that you bring that up. Mission, vision, values, leading from that perspective, I think is super important, especially as a founder, as an executive. It's something I've seen a lot of tech leaders struggle with, even VPs or CTOs, is really aligning a tech organization to the business. And that's in tech companies, where
Yeah.
tech is the
Yeah.
business, right? And it
Yes.
sounds like
Yes.
you've learned to navigate that well.
I've tried. I mean, the way I think about it is like you, and I always joke with this with engineers, is like you have the first kind of thing that happens is the business needs to figure out what its goals are. We need to have this much revenue, or we need to have launch this many products, or want to enter this new market, or whatever it is at different stages of maturity. You have like the business goals get figured out. Then you figure out, well, given those goals, what do we need to build? Do we need to repackage an existing product so we need to build a new product from ground up? So this is where the product managers and that level of kind of responsibility comes in. Like, what do we need to do to hit our goals? And then the engineers come in finally and are like, and I'm being obviously a little bit kind of, reductive here. It's not quite, it's not like a waterfall approach here, but then the engineers come in and say how we're going to build this, how much is the cost, what are the risks, kind of how we're going to do it. So the kind of the how and the when uh certainly come from the engineers because they're the ones fingers on the keyboard kind of doing the work. And I always remind engineers like you are the ones that are literally typing the code to build whatever it is. So like every time you feel like you're a little bit kind of, what's engineering's role in a company, like just remember at the end of the day, you're the one building it. So like that's kind of a cool place to be. But you have this a lot of these things ahead of you. Like what am I building needs to feed into the product plan of like the things that we need to do. And that product plan needs to feed into the overall mission of the business or the goals of the business. So I've seen too many situations where engineers just start building with unclear missions on the first two levels, and then you end up with a lot of a mismatch. So I often just want to say, hey, just zoom out for a second. Like, what is this? Why are we here? Like, what are we doing? And let's just figure that out first, and then usually the writing the code is the easiest part. It's not we're not unless you're doing something truly groundbreaking, which is possible these days. That's kind of the easiest part. The hardest part is figuring out what are we working on, and maybe even more importantly, what are we not working on, and why, and what's the getting everyone aligned on the same page.
Yeah, I was hanging out with some founders and tech executives not that long ago, and I shared an anecdote, and I've really come to the point where I believe it's relatively easy to build the tech. I mean,
Yeah,
don't get me wrong, it takes skill and experience and knowledge. It doesn't happen by accident. It's skilled work, but it's easy. You
yeah,
define the
yeah.
problem, you build it. Building a business is not a it's very difficult. And
Totally, totally.
in tech, we kind of well, discount the value of business, and certainly the salesperson archetype makes it easy to do, but building the actual business, the revenue, getting the that revenue in the door, making it sustainable
Yes,
is
yes.
so very difficult.
Yeah, and I completely agree. I think the single most valuable, well, there's like two partnerships I found in any company as a head of engineering or some senior engineering leader that is super important is with your product partner. And I've worked with some amazing ones in my career and with the head of sales. Like those, like because the head of sales is obviously the one telling you at the front line, like, are we getting the feedback that we want to get? What are we learning from our customers? Like, how is it going? And like, kind of, you need to, it's not always a common thing to have the head of sales and the head of engineering have a tight relationship. Like, they usually are very, not always the same kind of person or we're in different spheres. They have different things going on, but like that relationship is really important. And then the product, head of product, that triangle, I think
Mm.
is critical because, and to your point, especially with, and I'm sure we'll get to the AI conversation, but the AI tools and all the existing tools, software engineering is not that hard, and I don't, and it's not maybe professionally great for me to say this as an engineer that like what we're doing is not that hard, but to your point, what's hard is doing it, figuring out what to do and when at the right time and in what order and what is how much we have to do and not anymore to kind of get some product market fit. And for that magic to happen, you need a really close conversations with your partners outside of engineering.
Well, building another CRUD app, that's not hard, right?
Yeah, yeah.
I mean, we need skilled folks to do it again, but it's not like we're creating a whole new way of engaging in the physical world. It's not a new source of fuel, right?
Yes, yes. And there are companies that are doing things like, you know, fusion and cutting edge and I don't want to those are incredible stuff, but the even in the pretty high scale low latency kind of fintech world, it's not, again, unless you hit a certain amount of scale and success and great and then you invest, but at the startup stage is usually nothing is too out of the ordinary tech
I
wise.
love that you brought up high frequency trading because
Yeah,
that often introduces physical problems. In fact, like how close you are to the stock exchange network, right?
yeah, yeah,
And there are so
yeah,
many
yeah.
interesting problems in that space that are easy to discount for folks who don't operate there. What are some of your favorite problems you've tackled in fintech and have had to have
uh
creative engineering problems to solve them?
yeah. um I haven't done anything in the kind of ultra kind of high frequency stuff, in the microsecond, nanosecond range. I don't want to pretend I have. So, the startup I built that was called Quantopian, from call it 2012 to about 2020 when we were acquired by Robinhood, spent time. We were working in building kind of quant finance tools for everybody. And the quick summary of that is, at the time at least we thought, my co-founder, who was my former boss, John Fawcett, and I thought that we had met a few quants in various parts of our career. We didn't know what a quant was, but we met them, and we were like, wow, this is really interesting. We're both engineers. And we thought,
For
this
folks who
seems
don't
like,
know what
yeah.
quants are, could you
Oh,
define
yeah,
it real
yeah.
quick?
Yeah, a quant, well, a quant, at least the way I think about it, is a quantitative investor is somebody who approaches investing from a scientific or mathematical, rigorous kind of approach. So and there's all sorts of quants, so I don't want to try to define all of them, but the type I'm thinking about is you have a hypothesis about something in the world and you then you design an experiment and then you run the experiment and you get results and you see kind of you learn from the results. Maybe you were right, maybe you were wrong. You adjust. This is kind of how a lot of science is done. Obviously, you have like vaccine research or anything like this is how the scientific method works. But at least back then, a lot of kind of the most successful firms, at least many of them, had over the last 20, 30 years have been doing a lot of this kind of investing, systematic investing, but we're very quiet and no one had heard of them. And I met a quant once and I asked him, how do I become a quant? I didn't actually, I was just mostly out of curiosity. And he said, this was back in or the early 2010s. He said, you go to the right school, get hired by the right company, get on the right team, and then maybe they'll teach you like the inner kind of secrets of all this. And we thought that was very kind of crazy. Like if this were truly a better way, in quotes, of investing, and it was so secretive and hard to get into the inner circle and learning all that stuff, like it seemed like a net positive for the world that we could bring this knowledge out to everybody. And not just bring the knowledge out, but bring a community, build a community where people could ask each other questions and learn. So you didn't always have to go to the right school and get hired by the right company and be on the right team, especially if you were not anywhere near Wall Street, if you were all over the world, where the smart people everywhere, right? So we wanted to build kind of a free platform with as much data as we could put on it, all the infrastructure, all the APIs that we designed, the back testing, which is the way to take an take a idea and run it as if like rewind the clock 10 years, 20 years, 30 years and say, pretend I started in the year 2000 and ran this idea. Like, how would it look? How would I have performed? And you want to like simulate the world as much as possible throughout that process. So to kind of come back to your question about kind of interesting problems I've seen in fintech, some of the most fun ones I've worked on. One of them was this, which is when you run a back test, which is again, I'll just as an example, a common example we use. I don't think there's any actual alpha in this, which is the relationship between the price of gold and the price of stock price of the companies that mine gold. Because theoretically, if gold becomes a lot more valuable, then the companies who are pulling gold out of the ground presumably can sell for more. But then you also think, well, maybe the gold is going up because it's harder and harder to get out of the ground. So, like, how much of a relationship is there? So, but the idea is you can actually test this, right? You can actually say, let me map the price relationships between gold and companies that mine gold in the last 20, 30 years. And then buy the companies when the gold's going up and sell it when the price starts going down and things like that. But when you actually simulate history, you have to think about like what would have been the impact of this action that I'm pretending to have taken. So if I would have bought a lot of a certain company, my actions would have had reactions in the world. I can't just pretend that my action would have happened without anything else happening in the world. So this is called slippage. So you have to simulate the fact that like if I'm buying a lot of a company's stock on a certain day, that company's stock is going to go up in cost because the market's going to see that. And then I won't be able to buy all the stock I want to buy at a certain price. I have to assume the price would have gone up a little bit and kind of account for that. So building those models was fascinating to me as an example because you kind of have, there's no perfect science here. You're simulating a reality that never actually existed, right? You're pretending to go back 20 years and doing stuff, but you have to think about what is the most uh, accurate, but yet high ROI way of simulating. Like you could have gone down a rabbit hole and just like try to get better and better and better and better and more accurate simulating, but we would have overbuilt for our use case for our users, right? So we kind of have to find the right way there. So kind of just rewinding time and kind of like accounting for actions that didn't actually happen, but you're pretending happened because that's your experiment was kind of a really interesting kind of rabbit hole to go down. I never really thought about it that way. Um, I'll give one different example, which is just this is not as much fun. It's just uh, more gnarly, which is just the data is a big challenge for kind of the quant world or any kind of world where you're running analyses. You have to have good input raw data to kind of run analyses on. And uh, every data vendor has a lot of, well, I don't know about a lot of, but no data vendor sells perfect data. And no data vendor often serves all your purposes. So you have to, and then get data from all these different vendors, organize it, normalize it, make sure that like you can build an internal system that can understand kind of when did you know something. Like that's called the point in time stuff. So if Lehman Brothers went out of business in 2008, as we all know it did in the fall of '08 when the economy had a lot of trouble, and you start your and you have to know that company went out of business. Otherwise, your simulations no longer are are have high fidelity to reality. If you only simulate on companies that are still alive today, starting 20 years ago, that means that you already have look ahead bias. You're saying, I am going to just pretend I never knew about this company that went out of business. But if you start then putting your money into that strategy today, you will run into companies that go out of business. So you have to really have good think about what did I know at what point, and and often there will be a data point that comes in that's wrong on a certain day, and then it gets fixed the next day. We wanted to intentionally keep that wrong data point in the database for that day because on that day you did not know it was wrong. You did not know that the fix was coming the next day. So we spent a lot of time, arguably maybe too much time, ensuring that our system could not know the future and gave you an accurate representation of the world on a specific day, anytime in the last 20 years. So a lot of data engineering went into kind of building that kind of structure for that.
Hmm. Cool, cool.
Yeah. Yeah.
I think your journey is super interesting about how you built Quantopia over nearly 9 years, and then you sold it to a scaled tech company, Robinhood. Tell us about how that transition went. And you
Yeah.
sold Baby You
Yeah.
Built and then worked at a scaled tech company for a couple of years. That's
Yeah,
pretty cool.
that was a wild time. So in 2020, Quantopian had two businesses. Well, we had built a kind of market neutral hedge fund, which means we had raised money to take the best ideas in our platform coming out from users all over the world, and with their agreement and profit share agreements, run an investment vehicle that actually tried to beat the market. That was really hard and I can talk about that at length, but suffice to say, we ran it for a while. It did okay, but it wasn't great. I think particularly because we couldn't find a way to give enough raw data to our users to mine and to find interesting stuff. So we had shut that down. We separately had an enterprise software business selling white labeled versions of Quantopian to big asset managers and who would use their software on their quant desks or in their internal research teams. They would say that our software was better than what they had, which I still find that crazy. But I guess a small startup with a singular focus, has lots of examples of this, ends up building a very good product when that's the one thing you care about doing. So we had a bunch of big asset managers using Quantopian as their kind of research platform internally for their quants to do their work. But then with COVID happening, a bunch of those deals fell apart. A bunch of M&A conversations kind of came to a halt. COVID had just started, and it came to a crossroads where I'll be honest, I was just tired. It had been a long time. I had had to lay off. We had to lay off some people in the beginning of COVID, including some friends that I hired away from other companies, and that was a very difficult thing, but it had to get done, so we did it. And it got to the point where I just was running out of steam. I think I can't speak for my co-founder, but he can take a lot of pain. But I think he was approaching that same spot. Um, so we had known the Robinhood guys since they were small a company. We had visited them kind of back when they were all fit in a single room as well. And it's you wouldn't expect kind of this is not the how do I say a quant finance startup is not and Robinhood don't are not usually kind of thought of in the same conversation. They serve different user bases, different products, different markets, but they really liked our team. We had spent a lot of time thinking about financial data and APIs, like I briefly mentioned some of the examples we had worked on over years, and our tech was I think pretty good. So Robinhood bought our team in technology, and we joined Robinhood. I remember, I think it was election day 2020. It was in November, because that first day, everyone was like super focused on the election and making sure the site stayed up because, depending on what happens. So I remember that day, that first day was pretty crazy. I ended up, and we didn't all stay together as a unit, so we kind of spread out. But, and I'll get into all that, but I remember thinking like, I forget what day of the week it was, but something like on a Tuesday, we are still employees of Quantopian. On a Wednesday, we were employees at Robinhood. And I felt like we had just run like a marathon over, 8 years, but also
Mhm.
over the last 2 months specifically to kind of get this M&A thing going.
Real quick,
Yeah.
what was
Yeah.
the peak headcount of Quantopia over?
About 55 people or so, and I had managed maybe half the company, so about 25 in my org.
And when you joined Robinhood, what was the headcount at Robinhood then?
About maybe 800. something like that. And then they ended up tripling the company, in the next few years, which we can talk
So
about.
that's a
But
big difference. And
it's
then
a
you
big
see that huge
difference.
growth.
It's a big difference, and you end up seeing a lot of interesting things like, Robinhood still is a very impressive company led by very impressive people. I have a lot of respect for them. And so you join this company, you're like, wow, I felt a little bit in awe. I was like, I'm, in Slack, I'm in all the groups now. Like it was all remote. It was during COVID, so I wasn't in the same room as them. But I was like, these people really know what they're doing. They've built a multi-billion dollar company. And a little bit of like a having to like wrap my head around that after having come out of a journey that was very interesting and very fun, but not a huge commercial success in terms of an outcome. So there's a little bit of like, wow, like, but they still wanted to buy us, right? They still had to like something that we did. So there was a little bit of like uh pep talking myself to be like, we're here for a good reason. So like, let's not forget that as well. So the first few weeks were a little bit just kind of a blur. Like we were, as I said, exhausted from the journey and from exactly the last month or two jumping right into a pretty intense kind of time in Robinhood's trajectory, which nobody knew how intense it would be because GameStop happened like 2 months later. So that was quite the adventure and all the stuff after that. So yeah, it was a weird transition. But it was a lot of learning, it was a lot of communicating, it was a lot of like figuring out what we want to do. My co-founder and I were given a relatively carte blanche to say, hey, spend some time looking around the org in the brokerage engineering org, which is the group that we were in, which I think was the biggest part of engineering. I'm not sure, but I believe it was. And like figure out kind of what kind of group you want to build and kind of like write your own mandate. And then like let's talk about it and go from there. So we had a few weeks of figuring that out. We came up with a few ideas and got the ball rolling. We over ended up He ended up kind of being the product lead for the platform, so all the internal stuff, clearing, trade execution, all the kind of really gnarly stuff there. And I ended up being one of the engineering leads for kind of the product engineering side of it. So I ended up having a group that ran the options trading product, margin, which is lending, which is when Robinhood lends money to their customers, core accounting, so all the stats about the portfolio accounting, so like how is your portfolio doing and what's going on. So some of the most used parts of the app. We were talking about, we were researching a bunch of interesting other possibilities that didn't quite pan out. So yeah, and then the company grew quite a bit over COVID and the years after that, and had some layoffs, like a lot of companies did. I ended up leaving in 2022, sometime late 2022, I think 2 years after I joined. I was pretty burned out, and this is something that, burnout is a thing that I don't know talk about enough. But between my own kind of startup journey and then 2 years at Robinhood, which was awesome, met a lot of really great people, really impressive work that they're doing. I was just at the feeling like I just needed a break, and those 2 years at Robinhood were very intense between the GameStop stuff and then all the Dogecoin and crypto booms, and as well as a lot of subsequent layoffs that we had to run. I felt like it was a time to kind of just have a break. So I was trying to figure out how and when that would work. Um, and then a climate tech startup came calling called Patch, and they were working on building a marketplace for voluntary carbon credits, which I thought was really interesting. Climate is an area that's really important to me. I think it's of the problems that we face, probably the biggest one, because if it's not solved, it kind of obviates the other ones. So, that called to me, as well as the idea that like building a marketplace for carbon credits is kind of like taking the stock market, simplifying it, but rewinding like 200 years. Like there was very little regulation, very little recourse, very little price transparency. Kind of like how do different participants in the marketplace find each other is kind of hard. So there's a lot of kind of like I could see where it could go, right? So I wanted to be part of that. I spent about a year and a half there as a head of engineering. Great company, great people, but that burnout I thought would go away once I joined like a brand new, like climate was a brand new thing, and no, it did not. So February of this year of 2024, I left Patch and just took like 6 or 8 months off. I was just needed to. take a break. So happy to talk about that more. But that was a little bit of the journey from Quantopian to Robinhood was it was a whirlwind, but it was fun.
Hmm. I'm
Yeah.
I'm glad you had the opportunity to do that. I often espouse having a healthy balance in life, right? Work-life balance. It's not really balance as much as it's prioritizing all parts of life that are important, be it personal, professional, family.
Yeah.
And I think in startup circles, we still glamorize this hustle culture. And it's entrepreneurship is a marathon. It's not a sprint. And if we're
Yes.
compromising fundamentals of our lives, like it's not sustainable. And what were some of the lessons you took from
Mm,
hitting burnout so hard, taking the time
right.
to recover? Like, what are you doing differently now?
So I totally agree. So during my time off, I didn't quite know what my next job, company, work mode would look like. Um, I don't know if it would be a full-time job, a part-time job, advisory, a startup, big company. I really was, excuse me, I've had to sneeze, casting a wide net and talking to a lot of companies and didn't quite know what to do, well, what I would want to do. I wasn't in a huge rush. But to answer your question, when the company that I work at now called Entree, when I was introduced to them through a mutual connection, I really liked a lot of what they were doing, but the biggest thing I liked is the people, which I think is the most important thing. Um, and the people, the co-founders and the other senior leaders that I met there, and the company was only like 4 or 5 people when I joined, uh, were experienced, had been through a lot, good and challenging in their experience at big and small companies, had built very impressive companies in the past, and I thought these are the people who I want to work with people who have been through it all, who know what you're saying, Warner, because what you said was right, that it's a marathon, and who can match like my values, basically, right? And I think that's where I can do my best work. And not to say that there isn't a place for kind of sprints and working your face off. I think I really enjoyed that in my early 20s, although I still grind my teeth every night, literally after a summer of a lot of stress, the summer of '05, multi-threading problems in C sharp is something that has still caused me teeth grinding 20 plus years later, or 19 years later. But I really enjoyed that phase of my life. I don't think I'd want to like try to tell people, hey, don't do that. If you're young and unencumbered and this is what you really are passionate about, like by all means, work your face off. Like that's like I love it. Like that I don't think that's how necessarily the world changes, but I don't want to in any way suggest that people shouldn't do that if they want to. But I think there's lots of other ways to do it as well. I think that's the part that sometimes is less clear or less talked about. And so the place I'm now at, it's pretty cool. I'm the youngest person on the management team, and I was like, and I'm 43, and so it's in tech that's not so common anymore. And so that helps me kind of keep things in perspective. Like my partners, my colleagues have seen a lot more than I have, and I trust their judgment, and they and I share a lot of the same values of how we want to do work. And when I recruit engineers or other functions now, that's the message I give. I was like, I will never expect anybody to work all night. And if you want to, I'm not going to stop you, but I'm not expecting it, and I'm not going to give you a faster promotion necessarily or anything like that. I just care about output and impact. So that's a message I try to give people, and I try to share that experience. So like, yes, work is a source of a lot of satisfaction and happiness for a lot of people, but it doesn't have to be. And if it's not, that's okay. You can still be really impactful and be a really great colleague and kind of, have other parts of your life kind of in balance. I still find work extremely fulfilling, but I, have kids and for the last, 10 years, my oldest was 10. For the last 10 years, I've said, hey, at 5, I just have to go because it used to be daycare pickup and then it became school pickup and then it became making dinner for the kids or whatever it is. Like I just try to set the expectation that that's and then if that's my schedule. And I've never really had much pushback about it. I mean, I think people understand. I think having kids is also kind of a cheat code for like people understand that no one's gonna argue about that, you know. And I feel bad like for people who don't have kids who want to say, "Hey, I'm leaving at 5." Like I could see,
I have to let my
I would be
dog
fine.
out.
Yeah. Uh, sorry, just to be clear, I totally support their ability to leave at 5. I just think that the feedback they get from other people might be a little different than if they said that they had kids. So I just set expectations. I just set clear expectations. Say that like I have to go, and obviously if I have to come back later and deal with stuff, I will. I'm always connected, which is also somewhat unhealthy. But I have a lot of other sources of fulfillment in my life, primarily for my family, and so. I want to spend time with them. So it's just a matter of finding the right balance. But I don't want to be prescriptive. Not that that's what you're suggesting, but just I've seen a lot of pushback to like, like, oh, after COVID, work doesn't matter anymore. Like, live your life, travel or do whatever it is that you want to do. Like, for a lot of people, work does matter. It's how they make a living, or it's how they find it's how they make social connections with people who, are similar to them, or it's how they find happiness. Like, I don't want to try to like demonize work, but which I think sometimes is I can see online, but. I just think everyone just has to find the right balance.
Making an impact and creating value, right? And that can be through the businesses, our careers, and our
Yeah,
families, our lives, our relationships, right? And
totally.
if we're prioritizing one over the other, it probably means some other relationships in our lives are being neglected, and they're all important. Great thoughts there, Gene. Thanks so, or John, sorry.
Okay, no
Thanks
worries.
for joining us today.
Yeah.
Any closing thoughts for the audience?
No, thank you for having me, Warner. I don't know. I don't really have any super thoughtful closing thoughts. I'm happy to have, thanks for the conversation. I'd love to do it again, or if happy to talk to anybody who has any questions, or if I love any thoughtful kind of is there any pushback or any disagreements, I would love to learn about it and update my views and go from there. So please don't feel start to reach out. But otherwise, no. Happy holidays, everybody. Hope you get some good time with your families, and excited for the new year.
Okay, so two pointed questions then, John.
Yeah,
One, we often talk about books, but none came up during our conversation today. So,
yeah.
first, are there any specific books you'd recommend? And second, you encourage people to reach out. How would you like them to reach out?
Um, that's a great question. My email address, is this okay to share on
Sure,
in this
sure.
podcast? It's just my last name, so BREDECHE at gmail.com. So happy to get in touch. I'm in Columbus, like Warner. So if anybody's in the Columbus area, just let me know. Happy to meet you and get to know you. And for books, I tend to not be someone who reads a lot of kind of business books or management books or things like that. I mean, there's no shortage of them. The Mythical Man Month is one that jumps out at me as one that I read, regularly again. But one of the books I've read this year that I think was really great was called The World for Sale.
Hmm.
The full title is The World for Sale: Money, Power, and the Traders Who Barter the Earth's Resources. And the reason that I bring this up is because this opened up, this is from my time at Patch. There's a whole area of like natural resource trading, which I didn't really know about. The companies like Trafigura and Glencore are these behind the scenes, massively powerful and massively wealthy companies that have probably in very dubious methods have accumulated so much wealth and power because they do all or almost all the oil trading, gold trading, silver, aluminum, all the things that power the world today. So I just find it fascinating. This is a great book to kind of reveal kind of a lot about how the world works that in an area that I really was not well educated in. So if anybody else is interested in kind of the mix between trading, natural resources, kind of geopolitical, and kind of a fair amount of like spying and straight up kind of sabotage and things like that as well, The World for Sale by Javier Blas is a great book.
That's awesome, John. Thanks so much.
Yeah. Yeah.
CBuzz Tech is where it's at. Happy
That's right.
holidays, all. Thank you for listening to Project Gamma presented by GammaForce.io. Check us out on YouTube or your favorite podcast publishing platforms to catch future episodes. You can find those at projectemma.io as well. Take care, everyone. Thanks. Bye.